Shares of Paramount, formerly Viacom CBS, plunging today on the company's earnings, its outlook, and that rebranding. Farmer Jim Lebenthal joins us now. As you know, he owns the stock. He was optimistic going into the print yesterday. Now he has a little bit of egg on his face, maybe some omelet on his suit, because those shares today are getting absolutely shellacked. Jim?
Shellacked, schmeistered, whatever word you want to use. You know, yesterday on the show, Scott, what I said was, for me, this is all about the subscriber counts. That's what I'm paying attention to. Now, on that front, subscriber additions were well above expectations last quarter. Most importantly, the guidance 2 years forward, they raised guidance for subscriber counts and revenues from streaming by 50%. So 2024, they think they're going to have 100 million subscribers. They're going to have $9 billion in revenue from that. If I just do an apples to apples versus Netflix on a per subscriber count, that would mean in 2 years they're going to have a market cap of around 85 billion, which is roughly 5 times what it is today. So you're, of course, going to ask, why the heck is the stock down? And I'm not going to lie to you.
I wasn't going to ask that. I was going to say, do you think it's Netflix? What?
Yeah, Scott.
What?
Yeah. No. This is not something that you should guffaw at. And you and I have a history of me charging up hills. Sometimes I die on those hills. A lot of times I don't. This is a hill I'm willing to charge up. This is a company that, like Netflix, has a very meaningful subscriber base. Unlike Netflix, it's growing much more rapidly than Netflix, the subscriber base. The content is fabulous, Scott. And I'll put that up against Netflix content anytime you want. 1883, Yellowstone, the various legacy programs. So, today the stock is getting shellacked, schmeistered, whatever you want to call it. And that apparently is on the fact that they missed their earnings for the fourth quarter of last year. Maybe it's because they have to spend a little bit in order to build their subscriber base.
A little bit? A little bit? I read some of the projections that they're going to spend whatever, like 2 to 3 times what they're spending now minimum.
They've got the money for it, Scott. They've got the money for it. They've got $6.3 billion in cash. They did $1 billion of free cash flow last year. They're going to be free cash flow positive in each of the next 2 years. This is not a broken story. And you and I have a history of me charging up some hills and me dying on them. I'm telling you, this isn't one of those.
Jim, this isn't a matter of whether they are free cash flow positive or what their EBITDA is. It's a matter of growing it. It's a matter. No. It's a matter of how much they can grow it. And those are the real concerns as to why the stock is down. How much they're going to have to spend on the content. And I was going to ask you before, when you made all these lofty projections about their subscribers like it was the second coming of Netflix, how do you think they're going to get those, Jim? How are they going to get those subscribers?
I just explained to you that they're going to spend and that they have the cash and the cash flows to do it. And by the way, these are not my lofty projections. These are the company's projections, which basically, Scott, call for basically doubling the subscriber count over the next 2 years. They so far have exceeded all guidance that they have previously put out for their subscriber growth. All guidance. So why would I start doubting them now? Just because the stock's down, I don't follow what the stock market does for any stock on a day-by-day basis.
Well, that's not true.
This is a company with a good track record,
That's not true, because you looked at the decline today in Paramount, and you bought more. So obviously you do.
Of course. You're funny, Scott. You're trying to catch me on something, and I'm being pretty consistent. I'm being pretty consistent in what I'm saying.
I'm not,
Jim. This is a quality company that is growing well above its peers with cash on the balance sheet, cash flows growing. Of course I'm going to buy that.
I'm not trying to catch you in anything. You're making a uber bull case on a stock that's down 22%.
Pisses me off, Scott. It pisses me off. Not you, the stock, obviously.
Well, I
like our
too,
banter. I enjoy our banter. It's good. You take the other side. You push me. It's good. But as you push me, what you're hearing me do is not back down from this story, and I'm not going to.
Maybe you joined the boat that I mentioned earlier in the program. Has a specific name on the back, and it's called denial. Jim, I appreciate it. You're always stand up about it. I mean, I'll give you credit for that. right? There's always two sides.
Listen, just so everybody's clear.
Yeah.
I like our banter. I really do like our banter. I'm a little pissed off today because the stock just shouldn't be down 22%.
Okay.
You got to understand, if I'm punchy, that's why.
I'll take the other side, if for no other reason than to extend the conversation. All right, Jim, I appreciate it very much.
Good. Thanks, Scott.
Yeah, you bet.